Dumelang. I will be doing a short test, and it's adapted from the question paper, IEB question paper, and this is for grade 10. Now we're given information about Ruby Robotics Limited, which is a South African listed company with authorized share capital of 2.5 million, and they import and manufacture robotic parts and components for use in commercial and educational fields. They also earn commission income when selling how-to manuals from Masingita Manuals. Going to highlight that. So we know that they earn commission income, which is from Masingita. So it's commission income to us. They operate at a 25% markup on cost price. Their latest financial year end is the 28th of February. So this is the end of the financial year. That indicates to you that the beginning of the financial year will be the 1st of March 2021. Now they talk about on the 1st of March, they had 70% of the authorized shares in issue, which raised 6.3 million, which is your capital. On 1 August 2021, an additional 500,000 shares were sold at 400 cents each. This has been reported. No shares were repurchased during the year. Now, probably you don't know what's going on there, okay, but you will learn about this later on. For now, it is not important at all. And then I'm going to look at my fee adjustment trial balance for the year ended 28th of February, 2022. And immediately, because I've been asked to prepare the statement of profit or loss, okay, statement of profit or loss, and the following nodes, which is your inventory node, trade and other receivables node, and the last one will be trade and other payables node. Okay, so I know what I am looking for. And the first thing that I'm going to do is to go to my nominal accounts section. And in my nominal accounts section, I will actually pay attention to everything under nominal, which is your sales as well as debtors allowances. You have learned already that these two, we are going to take them to the statement of profit or loss. We will start with sales, and then we're going to have cost of sales. But from sales, you will have that 14,500,700,000. And for me to find, when I look at this, I only have debtors allowances. I do not have cost of sales. Okay, there's no cost of sales here. But earlier on, they told me that they mark up their products at 25% on cost. So I'm going to use that information to calculate my cost of sales. How do I calculate my cost of sales? I am going to take that 14,500,700 times it by 100 divided by 125. Okay, this is me finding cost of sales. My cost of sales figure will be 11,600,560. Now, immediately from, once I've calculated my cost of sales, immediately from my sales figure, I am going to subtract debtors allowances. Okay. Then I'm going to put in everything that is under nominal accounts section. Let me see what they have there. They've got commission income, so I will put commission income under operating income. Okay, I will leave it out for now, okay. But I will open brackets there and write the value there as commission income. What else are we given there? We given the packing material, so that one as well, I will go to packing material under expenses, open the brackets there and put 27,000, which has been put for you already. And then I'll go to my rent income, which is 744,000. I will go to my rent income and just open the brackets. So it's done for you already. The only one that didn't do is commission income, and put that 744,000 under rent income. And that's it. Done. So everything that I need to put in the statement of profit or loss from my pre-adjustment trial balance has been put through. I'm going to go straight to my adjustments. Now, the first adjustment says that credit sales invoice amounting to 625,000 were not recorded. Okay. The omitted invoice was found in the bookkeeper's drawer. So We sold goods on credit, but that transaction was not recorded. And by now you should know that when you sell goods and when goods are returned to us, four accounts are affected. Four accounts affected. The first one will be sales. Sales will increase because we sold goods on credit here. So we are earning income. Sales will increase. That's why for sales, I will put in that plus 625,000 at selling price. The other one that will increase at selling price will be debtors control, which you will find in trade and other receivables. So when you go to your debtors control in trade and other receivables, you will start with your trade debtors, which is 6,150,000. This comes straight from your pre-adjustment trial balance. Okay, so it comes from here. Okay, trade debtors is simply your debtors control, which is the 6,150,000. So you will put it there. And then, as I've said earlier on, this first adjustment will affect four accounts. It will increase cost of sales. I mean, it will increase sales. We have done that. It will also increase debtors control because we sold these goods on credit. And as I've indicated previously, debtors control will increase by the selling price of goods that were sold on credit. That will be added in trade debtors account. These are the only two accounts. And then there is another two, which is cost of sales and trading stock. What's going to happen to cost of sales? Whenever we sell, cost of sales will increase. Whenever we sell, cost of sales will increase. So that's how I calculated cost of sales. I took 625,000 times 100 divided by 125. It gave me cost of sales of 500,000. So cost of sales have increased. The last account, you are going to reduce trading stock. You are going to reduce trading stock. Trading stock will be under inventory, but I will show it as a calculation over here. Okay. I will start with my trading stock balance from the trial balance, from the pre-adjustment trial balance. My trading stock balance is 2,467,000. This 2,467,000. So I'm going to take that 2,467,000 and put it in my workings and then subtract the 500,000 because my trading stock is decreasing. I sold goods. So that's what I meant by four accounts being affected. That's it. Done. You're done with your four accounts. I did this with the grade 9s. And I just want to show it to you quickly. Hopefully I'll find it. So when goods are sold, four accounts will be affected. Do not forget that. We debit debtors control when they're sold on credit, and when they're sold for cash, we normally debit bank. And then we credit sales at selling price. Those two accounts will be recorded at selling price. And we debit cost of sales. Cost of sales will always increase whenever we sell goods. It will increase at cost price whenever we sell goods. And then we credit trading stock. We credit trading stock because we've sold these goods. We don't have them anymore. This is what I was talking about. I did this with the grade 9s. Credit sales means we sold goods on credit. It will affect four accounts. We debit debtors control, we credit sales. These accounts, we record them at selling price. Debtors control is debited because an asset is increasing. We're having more people owing us. Sales will also increase because income is earned and income increases on the credit side. Then we debit cost of sales and credit trading stock. We debit cost of sales and trading stock at cost price. We debit cost of sales because it will always be debited whenever we sell goods. It will be debited on the debit side and it's an expense, okay? And it will increase at cost price. It increases whenever we sell goods at cost price. Trading stock will decrease as I've indicated there. It will decrease because we are having less stock available, and it will decrease on the credit side because it is an asset. We good now? I'm going to go back to what we were busy with, which is this one here. All right, that is us selling goods on credit. Let's go to the second adjustment. Ooh, the second adjustment says here, a debtor returned goods right at the end of the financial year, which is the 28th of February 2022, which is the last day of the financial year. The cost of goods returned is 60,000. These goods are damaged and must be returned to the supplier. The creditor, which is the supplier, agreed to reduce the amount the entity owes. Okay, I'm gonna stop here where they said these goods were returned. Okay, since these goods were returned by the debtor, still 4 accounts will be affected. But now, this is the reverse of the accounts that we just did right now. We need to reduce sales on the debit side, okay? And because we cannot directly reduce sales, we need a record of goods returned by customers. This helps us to properly manage our services. In essence, the information about debtors allowances helps us determine whether we are selling good quality products. Because if customers are not happy with their products, we will have higher debtors allowances. That is why we have to record returns of goods separately. Instead of debiting sales, we are going to create a new account, and that account is called debtors allowances. We will debit debtors allowances and credit debtors control at selling price. The problem here is that we are given 60,000, which is the cost price. Okay, so I need the selling price, but I've only been given the cost price. So I'm going to work with this cost price. So the cost price, the ones that we record at cost, will be debiting trading stock. Why do we debit trading stock? Because we got trading stock back. And then we're going to credit cost of sales. The reason why we credit cost of sales is because cost of sales only increases when goods are sold. So it makes sense that when goods are returned, we reduce our cost of sales at cost price. What am I going to do now? I'm going to do exactly that. Okay, I'm going to reduce my cost of sales at cost price, right? Because that's what they gave me. They didn't give me the selling price. I'm going to work with the cost price and then go to my trading stock. And in my trading stock, I'm going to increase my trading stock by 60,000 Rand. I'm done with the cost price now. Now I need to determine the selling price. You see, now I'm stressing about the selling price, but the fact is I've got my marks already. Now I'm going to go to the selling price, find the selling price. Since I'm given the cost price, I'm going to take that 60,000, times it by 125, divided by 100. That will give me the selling price, and I'm going to subtract it from sales. Remember, debtors allowances reduces sales. We debit debtors allowances, but debtors allowances reduces sales. It will always be closed off against sales at the end of the financial year, and we are right at the end of the financial year. That is why we are reducing sales by that 75,000. But at the same time, we also need to reduce our debtors control by that selling price because debtors are owing us less, and that is because they returned goods back to us. Sorry for that. Hope you're good. Great. All right, so we are basically done with that transaction. All four accounts have been recorded. Do you agree? We are done. All four accounts have been recorded. So we are done. Right. We are done. I'm going to go back now and finish reading what I was given because I'm not done with the transaction. I'm just going to go back and finish reading. I just stopped where they said these goods were returned by customers. So I did what I needed to do. Now I'm going to go back to the question and finish reading the adjustment. Now it says the creditor, oh, these goods were damaged and must be returned to the supplier. Whoa. Now, immediately when they say that, they're telling you that what I did earlier on is wrong. I added those goods to my trading stock, and that is wrong because these goods were now returned to the creditor. Aha. But we return them to the creditor at cost price. Now, that affects my creditor's control. Now I have to rush to my trade and other payables. And when I get to my trade and other payables, I'm going to find trade creditors. Now I've got the amount for trade creditors for my pre-adjustment trial balance. And the amount for trade creditors there is 790,000 rand. So I'm going to put that 790,000 rand here and then subtract the 60,000 because now I'm going to owe the creditor less. I returned goods to the creditor. Done, right? Now I'm going to go back and finish reading again because whenever I read this adjustment, I get more and more information. Now, when I go back to the adjustment, it says the creditor agreed to reduce the amount the entity owes, which is what we just did. Oh, okay. I jumped that part here. Okay. But I did everything correctly. And they said they will reduce it by the value of goods returned, which was the 60,000. We have done that. Now they say they're going to reduce what we owe them only less than. So the cost price was 60,000, right? But they want to reduce it by 60,000. They will reduce it by 60,000 less 5,000. Hmm. And I already recorded the 60,000. But according to this, I was supposed to reduce my creator's control by 55,000. Why though am I reducing my creator's control by 55,000? Why is it? What is this 5,000 for? I mean, I'm returning these goods back to the creditor. Oh, they telling me that that 5,000 is for handling and repackaging fee. Now it makes sense. Remember when you bought a cell phone or you bought your laptop or you bought your gaming PC or you bought your games, well, games nowadays, they're digital. What else? You bought your shoes. Those shoes came in a box. And sometimes for you to get the product inside that package, you have to rip the package off. So that's what we did. When we got these goods from a creditor, we ripped the package off. Now we're returning them back to the creditor. And the creditor says, no, 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 no. I want my products in the package that I send them with. And then we are like, no, we don't have that package. And they'll be like, okay, our repackaging and handling fee will be 5,000 rand. We're going to charge you that 5,000 rand to repackage the goods that you returned. Firstly, I'm going to do what they asked me to do here. I reduced my creator's control by 60,000. That was wrong. So I'm going to add back the 5,000 because that 5,000, I still owe it to them. They charged me that 5,000 rand for repackaging and handling. And it's a repackaging and handling fee. So basically, when I add all of these up, it tells me that my creditors control will be my trade creditors, which is the same as creditors control, will be 735,000. Now, remember they said it's a repackaging and handling fee. Guys, that is obvious. That is a loss, and losses will be recorded with expenses. That is why I'm going to put this under expenses as handling or repackaging fee, and it'll be 5,000 Rand. Cool. See how easy it is? Easy peasy, lemon squeezy, right? All right, let's go to the third adjustment. The third adjustment says that a debtor that owed 78,000 was declared insolvent. Whoa, stop right there, right? When they say the debtor that was declared that was owing us 78,000 was declared insolvent. This declared insolvent means that the debtor will not be able to pay us back. When you are insolvent, it means that your liabilities are way more than your assets. So you will not be able to pay back your creditors. And that's what in normal terms we say, now you are at a point where you will be blacklisted. All right, I'm going to read further. Then they say the estate of the debtor paid 40 cents in the rent. So they paid us 40 cents. 40 cents for every 1 rand they owed us, they paid us 40 cents. Whew, that means now I need to go to my bank and add 40 cents of 78,000. And then reduce my debtor's control by 40 cents of 78,000. Is that what I need to do? Let me read further. Then they say the entity, the cash amount received was recorded. Oh, now that 40 cents, I don't need to record it because it was already recorded. So it has already been, the 40 cents of that 78,000 has already been added to bank, and the 40 cents of that 78,000 has already been deducted from my debtor's control. Good. Now let's read further. I don't need to record that, so I'm happy. Then they say the remainder must be written off. Now that's tricky. In 1 rand, 40 cents was received, meaning that in 1 rand we did not receive the 60 cents. Do you see where the problem comes in now? The 60 cents must be the one that we write off as bad debts. I'm going to start in my trade debtors. I'm going to take that 78,000 multiplied by 60 cents, which is my bad debts. That means my trade debtors must decrease by 46,800 because I will never get it back. So I'm writing this debtor off by reducing my debtors control by the amount that was owed by this debtor. So this person is gone, done, gone, gone. They are no longer our debtors anymore, right? They are bad debts. We good. Now, bad debts, because I'm writing this off, I will never get it back. It means to me it's a loss, people. And I explained this in grade 9. And watch a video on definitions, accounting definitions in grade 9, where I explain what an asset is, what an expense is. Under expenses, I specified that we have losses. It includes losses. That's a loss. So I am going to add this loss to bad debts because my expense is going up. But now for my bad debts, I already had 5,900. Now I'm going to add another loss of 46,800, which will give me bad debts amount of 52,700. We good? Great. Am I done with that transaction? Yes, done. Alrighty, number 4 says, adjust provision for bad debts to 4% of good debtors. Good debtors is just the balance of your debtors control. These are debtors that we still have that we have not yet written off. So I'm going to go to my trade and other receivables. When I get to trade and other receivables, I'm going to calculate the total of my trade debtors, which will give me 6,653,200. I'm going to take that 6,652,200 times it by 4%. That will give me 266,128. This is my provision for bad debts that I've just calculated. Now, this requires me to do a calculation just on provision for bad debts. The provision for bad debts in the trial balance was 260,000. The one that I've just calculated is 266,128, meaning that the one that I've calculated is more than the one that is in the trial balance. So since I need to increase my provision because this one is the correct one, I need to increase that one to this one here by 6,128. That 6,128 becomes an expense. It's an expense because it means the one that is in the trial balance is incorrect. I need to increase it. And provision for bad debts is bad news because it's an estimate of future debts that will be written off. We good there? I know that at varsity we never used to call it provision for bad debts. We used to call it something else. I forgot what we used to call it, but it's pretty much the same thing, okay? Now, that 6,128, because it's an expense, I am going to record it under expenses. Please note, I'm going to write it in full. It's provision for bad debts adjustments. Don't forget adjustments. Do you see? The one that we record here is provision for bad debts adjustments. If you didn't write this adjustment, then it means that it'll be -1 because provision for bad debts must be recorded in trade and other receivables. You see, provision for bad debts. It doesn't have adjustments. That's the one that we record in trade and other receivables, which is the final provision that we calculated. That's the one you record in trade and other receivables. Now, if you go to expenses and just write provision for bad debts, you will get -1 because that's a foreign item. Provision for bad debts is not recorded in the statement of profit or loss. It's recorded in trade and other receivables. The one that is recorded in the statement of profit or loss is provision for bad debts adjustments. Okay, and then you show the workings in brackets. So it'll be 266,128 minus 260,000. It'll give me 5,000. No, actually, that is incorrect. It's supposed to be 6,128. Am I right? Of course I'm right. It is 6,128. All right. So basically, I'm done with provision for bad debts. Yay. That's great, right? Can I now do this and do that? Because I'm done with those, right? Then they say the entity donated goods to a disadvantaged school, okay, disadvantaged school, which is Lerato High School, and 12,500 gross profit was forfeited due to this donation. That's a tricky one, don't you think? Why is it tricky? It is tricky because donations are only recorded at cost price. Donations are recorded at cost price. And here, what are they telling us? They're telling us that these donations were recorded at they were still recorded at cost price, but the problem is that they gave us the gross profit we would have earned if we sold these goods. If we sold them, we would have made a gross profit of 12,500. Probably we only noticed this right at the end when we did our financial statements analysis. We realized that our markup is not the same as the estimated markup. And then we researched as to what is missing, and we realized that, oh, we're missing gross profit amounting to 12,500. Oh, why did we miss this gross profit? Why didn't we sell these goods? And when we investigate further, we notice that, oh, we actually donated goods to a disadvantaged school, which is Lerato High School. Okay, that's Love High School. Now, we need to use that gross profit we lost to calculate the cost price of goods that were donated. How do we do that? I am going to go to my statement of profit or loss. And in my statement of profit or loss, I'm going to write donations. So it's already there. I don't need to write it. All right. I'm going to do a quick calculation inside the bracket. I'm going to take that 12,600, 500 or 600, multiply it by 100 divided by 25. Multiply by what you want, divide by what you have. Please check my videos on debtors journal. I explained that thoroughly in debtors journal videos. Multiply by what you want, divide by what you have. We have gross profit, which is 12,500. That is the 25%. We want 100%, which is cost of sales. This will give us 50,000. So we donated goods worth 50,000. Now, we donated what? What did we donate? Goods. So that affects my trading stock. So I'm going to go to my trading stock and reduce trading stock by 50,000. Leave it there. Let's move right along. I've done what I needed to do. Now I'm moving right along. Okay. Then they say in transaction 6, one of the shareholders took stock worth 100,000. The amount will be deducted from their dividends for the year. We don't know what dividends are, right? We haven't done this yet, but dividends is simply share of profits that the owners of the business get. In this case, the owners of the business, they own a company because this is a company, and the return that they get will be what we call dividends. So we're going to give them dividends, but the thing is, this dividends, we're not going to pay them in cash. Instead, the owner or one of the shareholders took stock. So we are going to credit our stock and debit drawings. Remember, drawings increase on the debit side. Dividends are similar to drawings. Okay, you will learn about this later on. So we have not done that yet. So all I'm going to do is to go to my trading stock and reduce it by 100,000. The other one will go to owner's equity and reduce owner's equity by that 100,000 because it's stock. It's stock that was taken for personal use by one of the owners, which is a shareholder. Okay, that's all I can do here. All right, so I'm done with everything here. Just keep on canceling. Cross them out, cross them out. We're done. Let's move on. 7, depreciation amounted to 45,000. Please note that depreciation is an expense. Depreciation for the current year, for the entire year, will be recorded under expenses as such, and that will be 45,000. That will also increase accumulated depreciation on the credit side. You haven't done it yet. So for now, just focus on what goes to your statement of profit or loss. Done with number 7. Number 8, the entity received only 80% commission income. Whoa, 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 whoa. Now let's go to our trial balance. How much do we have as commission income there? It is 49,500. So I'm going to take that 49,500 and put it in brackets for commission income, okay? I will put it in brackets for commission income. But the problem is that I only received 80%. I've performed services. I remember we are selling how-to manuals for Masingita. Remember that? Masingita did not pay us the full commission. They only paid us 80%. No, that's so wrong. But we can't say our income is only what we have received. Income that we record is the one that we have earned. We performed 100% of the service, but we only got paid 80%. So we are going to recognize what we performed, which is 100%. So what am I going to do now? I'm going to calculate what is missing. How do I calculate what's missing? Now, note that that is the missing amount. We need this missing amount, all right? We need to find that missing amount. And I'm going to come here. So we've got commission income. So if we take the total amount for commission and times it by 80%, it will give you what we have received, which is the 49,500. Total commission income, when you multiply it by 80%, it will give you the commission we have received, which is 49,500. Take the 49,500 divided by 80%, it will give you 61,875. Note that this is the total commission income we have earned, meaning that we are missing commission income. The missing commission income that we have earned but have not yet received, we call it accrued income. So you would take whatever you have earned as a total, which is 61,875, you minus what we have received, which will be in the trial balance, and that will be 49,500. We are basically missing 12,375. I would have not used such a long method. I would have gone straight to the point. But how though? Like this. I was going to take that 49,500, multiply by what I want. I want the missing part, and the missing part is only 20, divided by what I have. This 49,500 is only the 80%. Voila! Gives me the same amount, which is 12,375. This is accrued income. This is the income. Accrued income represents income you have earned, but you have not yet received. I am going to go to my commission income and add this amount that I have earned, but have not yet received, because in the statement of profit or loss, we put income we have earned and expenses we have incurred. So when you add 49,500 with 12,375, it'll give me 61,875. Am I done? Not yet, because that accrued income is an asset. It is owed to us by Masingita. Masingita, we need to add it in trade and other receivables. First, I'm going to calculate my net trade debtors. My net trade debtors, how do I calculate it? I am going to take this 6,653,200 minus 266,128 to get my net trade debtors, which will be 6,387,072. So it's this minus our provision for bad debts. It'll give us that, which is our net trade debtors. And then I'm going to add the 12,375, which is my accrued income. So accrued income is recorded in trade and other receivables. So when you take this net trade debtors, add it with this accrued income, it'll give you the total of your trade and other receivables. Okay, it's taking me somewhere else. It's fine, I'll do it later on. That's all. Is that all when it comes to that transaction? The answer is yes. So I'm done with these two here. Number 9, the bank statement received on 28th February 2022 reflected the following. We have a service fee of 780, a deposit fee of 120, and credit card levy of 1,200. The last one says it talks about interest on unfavorable bank balance. You did this last year when we did the CPJ and the CRJ. Service fee, deposit fee, credit card levy. What do we call those? We call them bank charges. All of these are called bank charges. Please remember, bank charges do not include interest on favorable or unfavorable. I'll come back to this, and I'll also come back to this one as well. I'm just going to focus on bank charges. Those three amounts, I will add them up and put them as an expense in statement of profit or loss. Bank charges, already we are sitting at 5,680. I'm going to add the 120, the 780, as well as the 1,200. It'll give me my total bank charges of 7,780. Those amounts that I added here, I was going to take them to bank. We haven't done that yet, and subtract them from my bank account. I will subtract the 780, subtract the 120, and subtract the 1,200. So we debit bank charges and we credit bank. Remember when we did accounting equation last year. All right. Done with that again. I'm going to go to this part about interest. They said interest on unfavorable bank balance. What do we call interest on unfavorable bank balance? Yes, it will be recorded in the CPJ. If it was favorable, we would record it in the CRJ. But this one, we will record it in the CPJ as what? Correct, as interest expense. And interest expense will be recorded there at the bottom of your statement of profit or loss as interest expense. So we'll put it there in brackets as interest expense. Here we go. Next one. A direct deposit from M Entle, a data that was previously written off. Oh, this is a bad data. You might be fooled by the fact that it's a data and take this 15,000 and minus it from debtors control. Guys, you will be wrong. Because already this person is no longer in our debtors control account. They were previously written off. Now, we did this when we did our debtors journal, but we did it as theory. Debtors Bad debts recovered is income, and bad debts recovered will be recorded under operating income, and we're going to write it as 15,000. This is a debtor that was previously written off, and they came back to pay us, and we'll record that amount as bad debts recovered under other operating income. All right, the last part of adjustment 9. Oh, that was it. We're done. So that amount will actually be added to our bank account, and then we debit bank account, and then we credit bad debts recovered. Bad debts recovered is income. Done with it. Amazing, isn't it? Then number 10 says the stock count records revealed the following. The stock count records revealed the following. Trading stock is 2 million and raw materials used is 25,800. I need to do a comparison here between what I have in my books and what I have in the warehouse. Let's see how much I've got in my books. Remember, whatever I record in my books, I use source documents to record it. So it's not reliable. So far, my adjusted balance is sitting at 1,877,000. So it's this minus that, plus that, minus that, minus that, minus that. It will give me this value here. Now I'm going to compare this to the stock count. Why do I even compare to the stock count? The stock count is the most accurate one because it means the stock is there in the warehouse and it was counted. So this is the reliable. That 2 million is reliable. And the adjusted amount in the trial balance is not reliable because it relies on the source documents. That is your receipts when you sold, your bank statement when you bought using EFTs and stuff, invoices when we bought on credit. So it's not really reliable because it's just based on paper trail. The most accurate one is the one that we counted. And notice that the one that we counted is more than the one that we recorded, meaning that the one that we recorded must go up. When your asset goes up, that amount that makes your asset go up, we record it as trading stock surplus, which is 123,000. It is 2 million minus 1,877,000. Trading stock surplus, we're going to record it under operating income as trading stock surplus. Put it the workings in brackets. Please note that if you don't put it as trading stock surplus, you write it as trading stock. That is incorrect because trading stock will be recorded under inventory. So it will be -1. Make sure you include the saying surplus, which is 2 million minus 1,877,000. That will give us 123,000. Yeah, right. We done. Let's go to the next one. They say packing materials. Oh, before I even go to the next one, that 2 million rand, I'm going to take it to the inventory and put it there. Oh, there it is. There it is. Put it there. Only the counted one will come to your inventory. And that's the counted one, which is 2 million rand. Then here they say that we've got packing materials used. Packing materials used are your expense. That is your expense. So right here for packing material, I'm going to put the one that was used, guys, used, which will be 25,800. And then from this 27, I'm going to subtract the one that was not used. So the difference between this and that is what was not used. This is what was bought. This is what was used. And then you minus what was not used. And the not used will be 1,200. That 1,200, we are minusing it from the purchased in order for us to get the used one. And the used one, as I've indicated, it is that 25,800. You subtract the unused. You don't subtract the used, you subtract the unused. Even in grade 12 right now, you have people writing 27,000 minus 25,800, and then they write that 1,200 as an expense. Guys, this is what we're gonna have. Okay. unused one is the one that we deduct. This is the unused one. People, normally they just go and they memorize and then don't realize sometimes the one that you given under adjustment is this one. Then they take this one and subtract it there, and then they take 1.2 and they put it here. They put the unused here. Note that you cannot put the unused here. You only put in the used ones. Only the used ones will be recorded as packing materials expense, people. We good? Please check my trading stock deficit and surplus. I explained it there thoroughly under adjustments. All right. The unused part obviously will be recorded under inventory as such. We're going to record it as consumable stores on hand. Total up your trading stock and inventory and total up your trade and other receivables. Done. Let's go to the last one. Rent was received for March, April 2022. Oh no, that's bad because guys, our financial year only ends on the 28th of Feb 2022. So this is rent income that was received in advance and it's wrong. And then they say that rent was increased by 11% on the 1st of September. Oh my word. There's nothing I can do here. Nothing I'll get right unless I prepare my timeline. Starting when? March 2021, ending when? 28th February 2022. Something happened in September. In September, rent increased by 11%. Please check rent adjustments if you don't understand what I did here. But we also received rent for 2 months outside the financial year. That's why I'm going to highlight those 2 months as red. We don't want them. We know that rent here was 6X. So 6 months, it was X for 6 months. And after that, it was X times 111 for 8 months. So we increased it by 111. By now, guys, you're supposed to know that I'm going to take this 8 times it by 111%. Numbers first. You did this in grade 8, okay? And that will give me 6 plus 8,88 X. So it comes from this here. When you take 8, you multiply it by 111, it'll give you this 8,88. It should give us our rent that we received for 14 months. Now, these are like terms. Just add their coefficients. It'll give you 14,88x. And then you divide both sides by that 14,88x, you will get 50,000. So when you take this, I don't know why I wrote that now. When you take this 744,000 and divide it by 14,88, it will give you 50,000. All right. But this X is rent before the increase. So we still need to find rent per month after the increase by taking that 50,000 multiplying by 111%. 50,000 times 111% will give you 55,500. So rent for March and April will be 55,500. But because it's 2 months, I'm going to multiply it by 2. It'll give me 111,000. That 111,000 is a current liability since it's income received in advance. I am going to record it in trade and other payables as income received in advance. However, that income received in advance also tells me that my rent income has been overstated. I need to reduce it by the amount of rent that I did not earn, which is rent received for the next 2 months, which fall into the next financial year. I'm going to go to my statement of profit or loss. For rent income, I'm going to subtract that 111,000. 4 marks, because you had to go through a lot, eh? Now, 744,000 minus 111,000, it'll give me 633,000. I'm done. That was my last adjustment. Then I'm going to take that 111,000 and add it here as income received in advance in trade and other payables. So my total trade and other payables will be 846,000. Done. I've closed pretty much everything. The only thing that I need to close now is my statement of profit or loss. I'm going to start up there. Sales, when you put this whole thing into your calculator, it'll give you a sales value of 14,780,500. Then you're going to subtract cost of sales. Cost of sales will be 12,040,560. This minus that will give me my gross profit. My gross profit will be 2,739,940. Done. I'm going to come to this box here. I'm going to add everything in this box. And the total amount that I get by adding everything in this box, so it's this 633,000 plus 61,875 plus 15,000 plus 123,000. That total, I'm going to put it here on top of the shaded box. And that'll give me 832,872, which is my other operating income. And then I'm going to add these two here, my gross profit and my other operating income. They will give me this one here, which is my gross operating income. Great. Now I've got another shaded box here, which represents operating expenses. I'm going to take this 15,340 plus 17,920 plus 87,690 plus 7,780 plus 52,700 plus 50,000 plus 25,800 plus 45,000 plus 5,000 plus 6,128. That total amount, I will put it here as operating expenses, but you're going to put it in brackets because these are expenses. Then you're going to take your gross operating income minus your operating expenses. It will give you your operating profit, which is this one here. Then you're going to take your operating profit and add it with interest income. It'll give you profit before interest expense. Then you're going to take profit before interest expense and minus interest expense. It'll give you profit before tax. Then you take profit before tax minus your income tax expense. It'll give you your net profit for the year, which will be 3,263,767. That was awesome. Great. What a nice way to get 100% in accounting. By the way, thank you for watching up to this point. I really appreciate it. Pretoria still leading, Cape Town second, Joburg third. I appreciate you guys supporting me. Also, it is coming through as well. Devon, Springs. I was hoping to get a lot of support from Springs because I actually teach in Springs, but yeah, Springs is down there, down there. Thank you for supporting. Thank you so much. Please subscribe, comment, like, share on social medias, on all your social medias. Spread the word that accounting is fun. Kgotso.